Welcome to Factful Finance. Let me ask you something. When you think of a bank, what comes to mind? Maybe it's a safe place to stash your cash, a loan provider when you need it, or even your home for a mortgage. But here's the kicker. Are they actually helping you build wealth, or are they just making a profit off of you? Now, before we dive deep, here's the truth. Banks aren't necessarily evil, but they also aren't your financial fairy godmother. Sure, they'll take your money in the form of deposits, and they might throw you a bone with a savings account that earns mere 1% interest. But is that really helping you build wealth? I think we need to dig deeper. Let's start with the basics. We all know that banks exist to make money. They're for-profit institutions, after all. But let's break this down. When you deposit money, they pay you a teeny tiny amount of interest, if they even do that at all. Banks, in essence, use your deposits to make loans to other people or businesses, and in return, they make a lot more money than they give you. The real kicker? The average savings account in the US gives you 0.06% annual interest. So, let's be real. If your goal is to make money, banks are not the place to do it. But why does this matter? Because the wealth building game isn't about sitting on your money. It's about making that money work for you. And here's where banks are falling short. Take Alex, for example. He's been diligently saving $500 a month in his savings account, watching the balance grow just a little bit over time. But after a year, the $6,000 he deposited is worth about $6,003. Yeah, not exactly life-changing, right? So what could Alex have done differently to make his money grow faster? That's the million-dollar question, isn't it? Well, Alex could have invested that money in assets that actually appreciate. Stocks, bonds, mutual funds. These are where your wealth-building journey begins. Let's not forget that historically, the stock market has offered annual returns around 7% on average. Compare that with your savings accounts, 0.06%. No wonder your money feels like it's just sitting there. Banks don't really incentivize you to take those steps either. They'll promote their savings products, but they're also busy offering high-interest credit cards and loans with sky-high rates. You see, the real money for banks doesn't come from paying you for your deposits. It comes from charging you fees, interest, and penalties. The financial ecosystem is stacked in their favor. Now, I'm not saying that banks are evil. They do provide a lot of value, like easy access to your money, loans for big purchases like homes or cars, and secure places to store your cash. But when it comes to actually growing wealth, well, their interests aren't exactly aligned with yours. Let's take a look at the bigger picture. Banks rely on you keeping your money there, not growing it. They offer you a false sense of security. Hey, you've got a savings account. You're good. But are you really? I mean, inflation alone is eating away at the purchasing power of that money. Over the long term, that $6,000 is actually losing value if it's sitting in a low-interest account. So, what can you do? First, start educating yourself about other financial products that are designed to grow your wealth. Investment accounts, retirement accounts like 401ks and IRAs, and brokerage accounts can help you leverage the power of the markets. Take a look at how investors like Ava, who switched her savings into a diversified portfolio of stocks, bonds, and ETFs, saw her money grow by over 10% annually on average. That's wealth building in action. And guess what? Her bank wasn't the one helping her. But don't think for a second that banks are sitting idle. Oh no, they're jumping into the investment world too, with things like wealth management services, financial advising, and even their own investment products. But here's the rub. The fees they charge for those services are often pretty hefty, and you can do just as well, if not better, by taking charge of your own financial planning, if you put in the time and effort to learn. Let's address the elephant in the room. Not everyone's ready to dive into the stock market, and that's okay. It's scary to take the leap, especially if you don't have a ton of experience or know where to start. But here's something important to keep in mind. Not all investment options need to be complicated or risky. Index funds, for instance, provide broad market exposure with low fees, and they're a great way to get your foot in the door. For those more risk-averse, bond funds and CDs can provide stable, though less impressive, returns. Here's the bottom line. Are banks helping you build wealth? The short answer is no. at least not directly. But do they offer value in the form of safety, access to credit, and a basic place to store money? Absolutely. Banks are great for keeping your money secure and accessible, but if your goal is to build wealth, you'll need to look beyond that. Instead of relying solely on your savings account, educate yourself, explore investing, and consider talking to a certified financial planner to help you navigate the wealth-building world. Wealth isn't built by saving pennies. It's about strategic decisions, smart investments, and knowing where to put your money. Remember, it's not about how much you save, it's about how much you make that money work for you. So what's your next step? Drop your thoughts in the comments. I'd love to hear how you're building wealth. And if you found this video helpful, you know what to do. Hit that like button, and don't forget to subscribe for more content to take your finances to the next level. This content is for educational purposes only and not financial advice. Always consult a certified financial professional for personalized guidance. And if you're hungry for more insights, check out this next video on how to build a retirement plan that'll make your future self thank you.